How inflation and global economics shape wealth building. In the ever-evolving landscape of global economics, inflation is a critical factor that shapes the path to wealth building for individuals and nations alike. Understanding how inflation influences economic stability, investment strategies, and wealth accumulation is essential for anyone looking to build a secure financial future. In this script, we will explore the complex relationship between inflation and global economics and how these factors affect wealth-building strategies in today's interconnected world. Number 1. The basics of inflation and its impact on wealth building. Inflation refers to the rate at which the general level of prices for goods and services rises, eroding purchasing power over time. While a moderate level of inflation is considered healthy for economic growth, excessive inflation can have detrimental effects on wealth building. When prices rise too quickly, money loses its value, and purchasing power declines. This makes it harder for individuals to save, invest, and maintain their standard of living. For wealth builders, understanding inflation is crucial because it affects every aspect of financial planning. Savings in a bank account, for example, lose value as inflation rises. Number 2. How inflation influences global economics. Inflation is not just a local economic issue but has global implications. It affects currency exchange rates, trade balances, and international investments. Countries with high inflation often see depreciation in their currency value, which can lead to a trade imbalance as exports become more expensive and imports cheaper. This situation can impact global wealth-building strategies, particularly for multinational corporations and investors. For example, a country experiencing high inflation may attract foreign investment due to its potential for higher returns, despite the increased risk of currency devaluation. Number 3. The role of central banks in controlling inflation. Central banks play a pivotal role in controlling inflation through monetary policy. By adjusting interest rates, central banks can influence the money supply, thereby affecting inflation levels. For instance, raising interest rates can slow down borrowing and spending, reducing demand and, consequently, price increases. Conversely, lowering interest rates can stimulate the economy by making borrowing cheaper, potentially leading to increased spending and, in some cases, higher inflation. Number 4. The impact of inflation on different wealth-building strategies. Inflation can affect various wealth-building strategies differently. Real estate, for example, is often seen as a hedge against inflation. Property values tend to rise with inflation as construction costs and rental income increase. This makes real estate a popular choice for wealth builders looking to preserve value. However, it's essential to consider location and market dynamics when investing in real estate, as not all markets are equally affected by inflation. Stocks can also be a valuable asset class for wealth building in an inflationary environment. Companies can pass increased costs on to consumers through higher prices, allowing them to maintain profitability. However, the stock market can be volatile during periods of high inflation, making it essential for investors to diversify their portfolios and choose companies with robust pricing power. Defensive sectors like utilities and consumer staples often perform better during inflationary periods because they provide essential goods and services with relatively stable demand. Number 5. Global wealth accumulation amidst economic uncertainty. The interplay between inflation and global economics has a significant impact on wealth accumulation strategies worldwide. In an era of economic uncertainty, investors must be vigilant and adaptable. For instance, during periods of high inflation, wealth builders might need to reassess their investment portfolios, seeking assets that can maintain value, such as commodities or real assets like gold and silver, which often perform well in inflationary environments. In developing economies, where inflation can be particularly volatile, wealth-building strategies must be more dynamic. Diversifying investments across international markets can help mitigate risks associated with local inflation. Wealth builders might also consider investing in assets tied to global commodities or emerging market equities, which can provide opportunities for growth despite local economic challenges. Number 6. Wealth-building strategies for the future. Looking ahead, it's clear that understanding inflation and global economics will be crucial for anyone aiming to build wealth sustainably. Wealth builders need to be proactive in monitoring inflation trends and central bank policies. This requires staying informed about global economic indicators, such as commodity prices, currency fluctuations, and interest rate changes to make informed investment decisions. Education is also vital. Wealth builders should invest in financial literacy, learning how inflation impacts their assets and liabilities. This includes understanding how inflation can affect mortgage payments, the cost of living, and retirement savings. By preparing for the impact of inflation, individuals can create a robust wealth-building strategy that withstands economic fluctuations. Thank you for tuning in. If you enjoyed the content, please hit the like button and subscribe to stay updated with our latest videos on YouTube.